investors in Nigeria's equity markets have renewed their appetite with increased bargain hunting in bellwether stocks, unfazed by the 2023 presidential elections. Olamofe Mathew, an analyst at EDC Securities, joins me for a discussion on the Nigerian equities market. Olamofe, it's a pleasure to have you on the program. We saw the market up about 2% last week, so cumulatively for the year, 7%. You could say that investors have shrugged off any inkling of panic around the elections, even though many would suggest that it's a lot to be concerned about. But overall, what do you make of investor sentiment now that the polls are over?
Okay, thank you so much. Good afternoon, and thank you for having me. I think this is very much in line with our expectations at the start of the year, where we alluded to the dynamics on the market. And I think we emphasized that unlike previous pre-election years, where we've seen more participation from foreign investors. The dynamics have really changed over the past years, recent years. And at a time like this, it's more local driven foreigners. And so what we would have expected to see as we approach the elections and now during the elections is to see that impact in the market. But that's not what we are seeing at the moment. Just like you already alluded, the market was up 2% week on week last week. And at the end of business today, market closed up by 0.69%. And so that clearly states that sentiments in the market remain positive. And it's quite interesting that all sectors will saw positive performance, right? And so it all boils down to the changing dynamics in the market. Market participants are more local driven, and I think they're very used to our politics, right? Particularly for PFAs who are long. There is no pressure for them to sell off, particularly when they're in a loss. But what you see a lot of investors doing at the moment is look for stocks that have attractive dividend yields and that they are very convicted. They have convictions regarding performance. Again, it's also reflective of what is happening in the fixed income market, where you've seen yields remain very subdued. Although the last NTB auction was very surprising. It came in very, very positive. It increased significantly. But if you look at the secondary markets, sentiments, the performance remains very subdued. Average use remains very low. And so looking at alternative options are available to investors. Investors will naturally go for equity instruments that offer attractive dividend yields as against investing their monies in fixed income space where returns are quite subdued.
Okay, let's focus on some company news now. BUA Cement and Dangote Cement, of course, have been reporting very decent numbers, I would say. Maybe we can start with those companies and get your overall view on those companies specifically and then the cement industry in general moving into 2023.
Okay, so I didn't quite get the later part.
I wanted to get your perspective on BUA Cement and Dangote Cement's performance.
Thinking is about that was just released, Dangote Cement and BUA Cement, right? The cement performance have been more price driven, right? If you look at what played out last year, we had a lot of emphasis on volumes not doing as much as they did 2 years ago. And again, it's because of the macro dynamics, the macro issues that we experienced last year. One, elevated inflation impacting on consumer purchasing power, scarcity of FX, pain on investments, and the likes. And so for a lot of these industrial names, volume was really, really an issue. But they were able to make up with this in terms of pricing. A lot of them were able to increase pricing. And so if you look at performance for most of these names, of course, they did well in terms of revenue. But it's more price driven, not volume driven. But if you look at it as a whole, looking at performance as a whole, you kind of see that the cost pressures are still there. If you look at margin, putting margin down year on year, that's quite reflective of cost pressure, particularly as regards energy, right, which is really weighing on performance. And if you also look at some of them that actually is financing, like Dangote Cement, you also saw that impact on performance. So what we expect going forward now is why the budgets, we kind of very bullish on capex, and the cement space is really an equilibrium market, and so we expect that for those players in that space, it will be positive for them. I expect that volume should pick up going forward, to be fair, right? But again, I think they will have the opportunity to take price increases because it's an oligopolistic market. And so, I mean, if give or take, you have to buy regardless if they increase pricing. And so, performance for this firm, for these companies in the industry remains very firm in 2023. But our concerns still remain on elevated prices. But we don't think it's going to be as impactful as it did last year because we don't see diesel prices increasing at the rate at which it increased last year. That's for one. Given the fact that these firms can actually take more price increases, means that we probably will see a recovery in margin in 2023 as against what we saw in 2022, which is good for their performance. And so we are still kind of bullish on their performance in 2023. But from a pricing standpoint, we think for some of those names, investors have already priced for instance, for Boa Cement, I would think that while the pricing, and for Dangote Cement, we think that there have been elements of the share buyback being priced into their pricing.
Right, Olamofe, I apologize. I really have to jump in there because we have run out of time. Thank you so much for your insights. Olamofe Mathew is an analyst with EDC Securities.